Hello and welcome to a Switzer CEO Masterclass, and today we're talking to the MD of Rafaella Resources, a mining company, an Australian mining company that is based in Spain. Steve, thanks for joining us.
Thank you. Thank you for inviting me.
So Steve, tell us about the company. A lot of people are always intrigued that you've got an Australian company that really is mining in Spain.
Well, obviously Australia is a great place to set up junior mining companies. It's got a very liquid market. The ASX is pretty open to mining in a number of jurisdictions around the world. Rafael is no different. The company was listed back in July 2018 with a number of exploration packages in it, a gold exploration in WA and a polymetallic exploration play in Canada. But really, it was set up to look for something a bit bigger, something a bit more exciting, and they came across that with Santa Comba in Spain. And Spain is a very familiar mining jurisdiction. It's been mining since the Roman times. It's pretty open. They removed royalties to encourage mining investment, etc. So, Spain is a place where there's a lot of successful mining companies operating, and this is no different. Santa Comba is a brownfield mining site that's got permitting in place. It's got a resource, it's got infrastructure, everything's there really ready to go. And this was a great opportunity for Rafaella to come in and pick up an asset that is near-term production.
Okay, so tell us what you're actually mining and why this was available in many ways.
Yeah, so this is a tungsten and tin mine. It was mined back in the 80s. The tungsten market has had its ups and downs. It is a product that is dominated by Chinese supply. And in fact, in 2014, the World Trade Organization prevented China from limiting its exports into the world market. So it had to open up those markets. It supplies 80% of the world tungsten, and the price of tungsten fell significantly. And as a result of that, the price fell. The company that owned the mine at the time got into difficulties. It was a construction company, and that was a time when also construction was struggling in Spain. And so it went into administration. So this is a mine with an awful lot of investment in it. It's got a lot of plant and equipment. It's got offices. It's got infrastructure. As I say, it's got permits. And it went into administration. It was picked up by a group of people based out of Hong Kong and Spain that recognized the opportunity. The forecasts for tungsten are pretty bullish. There's a steady growth in demand. It's a critical material. It's getting more and more attention, particularly with rising tensions in China. We could see tungsten, jumping to the forefront of people's attention in the near term. We'll see where that goes, but certainly saw it as a great opportunity to come in. And this group went in and bought it. And in August of last year, they vended the Santa Comba mine into Rafaella Resources. So really, Rafaella Resources now is a combination of those shareholders that were there at the time of the IPO, and also those people that acquired the mine out of administration. So we've got Hong Kong investors, we've got Spanish investors, and we've got Australian investors sitting on our share registry.
So what is tungsten used for nowadays, and what is the future of the kinds of products that use tungsten?
So tungsten, it's not well understood or well known, but it is actually the second hardest material after diamond. It's highly abrasive resistant. It's got the highest melting point of any metal. And the result of that means it's quite unique, and it's used in drilling for oil and gas and mining. It's used in the manufacture of aircraft engines because it's very heat resistant. It doesn't expand or contract. So it's very resilient to heat change. It's actually unknown. It's actually found also in electric cars. It's found in your mobile phone. When your mobile phone vibrates, that's tungsten. So it's got a fairly unique applications in everyday life.
All right, so how's the company itself traveling? Coronavirus challenges and whatever. How is the company of Rafaella Resources traveling right now?
Look, it's doing very well. In fact, yesterday we announced a upgrade to our resource estimate. So we've had over 100% increase in our resource. That was announced yesterday. A very, very good positive result that followed 7 months of drilling. So when we took over the project back in August, what we did is we first focused on the resource. We wanted to get that resource to a level of certainty that we could feed it into a mine plan. This is all about development. And so we completed a 9,000 meter drilling program, 65 holes. That was done in March. And just yesterday, we released an increase. So we now have 10.6 million tons of tungsten. We have over 18,500 tons of the metal, contained metal, which is quite a sizable amount and certainly sufficient to underpin a development. So that was our initial focus. The other piece that we've been working on is the feasibility study and understanding the metallurgical work, doing a lot of test work, and that's ongoing extremely well, and we expect the results of that back in the next 4 to 6 weeks. When all that comes together, we'll be completing a feasibility study. We expect that to be done in August, and then we'll be moving very quickly into development. And one of the great advantages of this project is because of all the existing infrastructure in place, because it's got permits in place, we can actually move very, very quickly through to production. There's a lot of plant and equipment already there. There's offices already there. So, we don't have to hook up electricity. There's grid to site. There's sealed roads. We don't encounter the same problems you have in Australia, where you have to build a lot of infrastructure to these sites. And we're only 60 kilometers to a deep water port. So this is a project that once we've got the feasibility study done, we can move rapidly through to production. And that's great news for Rafael and the shareholders.
Okay, so I know when I was preparing for the interview, Steve, I did the most obvious thing, looked at the share price chart, and around August of 2019 was around 19 cents, and then it dropped to 8 cents. What was the reason for that?
No, we've had a number of shareholders. I would say it's largely due to movements in the market and also COVID-19, where shareholders have had a look at their portfolios. Some have had to liquidate some of their portfolios, not just ours. We've spoken to some of our bigger shareholders, and they've had to liquidate not just our shares, but also other shares held in their portfolio. So we've suffered as a result of that. We are a small company with not a lot of trade. Something we'd like to see is a lot more activity within our shares, a lot more liquidity that will make it easier to buy and sell. But that's something we're working on every day and trying to improve the volumes traded. But because of those low volumes, we only need a few people selling out, and it impacts our share price quite dramatically.
What about the finances of the company? How are they right now?
So when we did the acquisition back in August, we also raised $2.6 million. That was done. That was added to what was already a fairly healthy bank balance. And what we had done is we budgeted sufficient funds to get us through the drilling program and the feasibility study, and that is still the case. But what is clear is when the feasibility study is completed, we'll need to go to the market and raise additional capital to then build the project. And so that we would expect that to happen probably sometime in September, I would imagine.
And how much do you think you'll be asking the market to cough up?
Well, that's going to be subject to filing our feasibility study, but we think it's going to be a sum that's extremely manageable for a company of our market capital. We're not looking at tens of millions. We're looking at something less than $10 million. And that may be a combination of both debt and equity. We have a number of very key shareholders on board that could provide us debt. And so to the extent possible, we'll do a blend of debt and equity.
Okay, so if you had to sum up Rafaela's competitive advantage coming out of hopefully the coronavirus in 2021, where even the IMF believes that the world economy will be on the pickup, what do you think is the competitive advantage?
Well, we'll just be commissioning around that time. So we'll be ready to supply the market with tungsten in a market that's probably going to require a lot of tungsten. I mean, with the rebound in the market, increase in car sales, increased activity right across the resource sector, we would expect tungsten to be in strong demand. Don't know where things are going to go with the China trade war, but that may have an impact as well, which would only work to our favor. There are very limited non-Chinese suppliers around the world, very few in Europe. So we'd be very well positioned there. So as a competitive advantage, one would be our timing. And relative to other juniors out there, we have permits in place, we have infrastructure in place, so we can move rapidly. So we think we're extremely well positioned for any sort of rebound in the market.
Okay, I always like to ask a CEO or an MD this question. If you could imagine the most perfect things actually happening over the next 12 months, what would those most perfect things be?
Well, that's a bit of a difficult one for someone who looks after tungsten, because tungsten actually thrives in geopolitical uncertainty. So increasing problems between the USA and China, an increasing focus on critical materials, those things will typically lead to an uptick in the price of tungsten, which will then flow through to positive news for Rafaella.
Okay, well, I hope you get your wishes, but I hope it doesn't affect other aspects of my investments.
Absolutely. Look.
Thanks for joining us, Steve.
Thank you for your time. Much appreciated.
That's Steve Turner, the MD of Rafaella Resources.